Good morning, welcome to the Phoenix Blue update for Monday the 6th of March, presented this morning by Tom Colley. Last week we had a week dominated by the dollar. We had the futures markets changing their position on a potential Fed rate hike in the March meeting, which is the 14th and 15th next week. They were showing a probability of about 40% for that hike to occur. In the week last week, they moved from that level to in excess of 90%, reaching even maybe 95%. Why did that happen? Well, we had a whole string of FOMC members coming out with hawkish comments suggesting that they were of a view that a rate hike was imminent. We then on Friday had Janet Yellen, who specifically said a further adjustment to Fed funds rate would likely be appropriate if the current picture on inflation and employment remained the same. Now we've got non-farm payroll this Friday, which will cover the employment sector area of that comment. So as long as we see good data there, we can expect the rate rise to stay on track. On Tuesday and Wednesday during the live meeting, we have all the inflation data coming out of the States as well. So I would suggest that there remains uncertainty until right up to the death there of that meeting, simply because her specific comment talks about inflation. That will be the most current data. So if that inflation data was to disappoint, I would suggest there's still a good possibility that the rate hike might not occur, despite what the markets have written in, or what the futures markets are saying that's the case. Okay, let's start over with the news. Already today overnight we've had retail sales in on the Aussie coming in at 0.4 there against the forecast of 0.4, so bang on. Other than that, a quiet day, trading day. We have one final FOMC member, Kashkari, speaking excuse me, at 8 o'clock this afternoon. He's a new voting member. There's some uncertainty, but he's presumed to be a dove, so any comments that he has will obviously add to the picture for that March rate hike. Then overnight we have the RBA, the Reserve Bank of Australia, cash rate and rate statement. Again, we don't see a change in the rate from 1.5%, the current rate. However, we could potentially see a change in tone. We've had some negative particularly employment data since the last meeting, and the trade balance data was particularly disappointing for the January trade balance, which came in at 1.3 billion versus a forecast of 3.5 billion. Now that's a huge drop, so could influence exactly what Governor Lowe says during the statement, or the written statement. It doesn't appear to be a press conference after that. Okay, over to the charts. Now this is the dollar index where we usually start, but today I've put up the weekly chart. The reason being is, despite all that dollar strength, look at last week's candle. We barely managed to close above where we started the week. Yes, we got right up here, and we actually were above 102, which is a nice key level at one point. But look where we ended the week, right back down where we started in the 101s. This suggests, well, there is a reason predominantly for this. When we look at the euro chart, we'll see that the euro showed a lot of strength all of a sudden on Friday. But this gives us uncertainty, despite what the markets are saying about the Fed rate hike. Is it already priced in? Is there more uncertainty amongst traders than the futures market would suggest? So that leads us to be somewhat uncertain, and we will be trading cautiously until we see something in the markets to change our view on that. Over on the yen, well, we reached a key level at the same time as the dollar index reached 102. This is about 114.40 through here. You can see we've got a bull flag, stroke a downward channel there. If we get a break above that and a retest of that level, that should be on increased dollar strength and we should then be in line for that rate hike, and see that being correlated by the dollar index. Here's the euro. Well, that's Friday's bar. That's the bar that has caused a great deal of uncertainty. A sudden recovery from the euro, we believe, based predominantly on the French presidential election. The centralist candidate is gaining ground on Le Pen. Fillon, the candidate who is under investigation for, shall we say, fraud misdemeanours relating to expenses, parliamentary expenses, etc. He had a meeting at the weekend, and there was some risk that he would pull out of the race. He hasn't done that, but undoubtedly his vote has been hurt. If he does subsequently pull out, where will that vote go? Will it go to the centralist candidate Macron, or will Le Pen benefit? So there's uncertainty, but the euro prefers what it's seeing than what it had seen up to that point. Now, in the respect of this chart, we have an intraday bias which is long. We've got a double bottom here, a neckline through there. We'll be looking to take intraday trades to the long side there. However, we also have a commitment of traders extreme short signal that has begun to show. So we will be looking to restrict that bullish move to either through to this 107 level here, or this 108, I think that's 108.20, 108.30 level there. So either of those levels giving us a potential turning point to return to the downside. Over on the pound, we had a bearish week last week. There is an amendment being brought to the Brexit bill by the Houses of Lords. There's talk of that particular one is in relation to existing EU citizens living in the UK. The House of Lords want to give them guarantees ahead of any guarantees of the same for UK citizens in EU countries. They're also seeking to add another amendment which would mean that whatever the results of the negotiations, it would require debate and a bill in Parliament to pass the UK leaving the EU, particularly if no agreement's reached and there's effectively no agreement to debate. The fact that situation is also seen as an area that the House of Lords would like the House of Commons to have the vote on. Over on the Aussie, we had a great trade last week. We got right in at 77.30ish, right at the high here. Sorry, that was the week before. We had this currency holding up strongest prior to this break on Thursday. Against other currencies, it capitulated on Thursday. A big move down, gave us some nice profits in there. We took some profits, and we're now looking for another opportunity to add into this trade to the short side. We will be looking for intraday price action type reversals at one of these two levels to take it and targeting back down to the 0.75. We have got that RBA statement overnight. That could well determine whether that 0.75 level is broken or otherwise. So we will be watching that with eagle eyes. If we do get a stance which would suggest this market could go lower, we may extend our targets from that level that you can see through there with just above 0.75 with our target at this moment in time. Over on the Kiwi, which was certainly one of the weaker currencies last week, we had got into a trade at about this level. As I think I told you on Friday, we failed to stay in that. We'd got our stops at break-even, money off the table, but we were stopped out at break-even there. And then we didn't get another opportunity to get into this trade. We will be looking for pullbacks in this trade, and we will be looking to target these lows around here, as we do see the Kiwi as being distinctly weaker than the Aussie. Another trade that we're in at the moment, and we've talked about, is silver. You can see that on Thursday, at the same time as we had the capitulation from the Aussie, silver also broke strongly to the downside. We've had stops at break even with profits off the table. We're now looking for another opportunity to add in to take this down to the downside with a longer term target of the lows over here at about 1550, 1560 level. We do need this break of this channel and then look for a retest for this level through here to take that to the short side. But the picture for this week, despite all that dollar strength last week, there is a great deal of uncertainty. We've got the French election affecting the euro. Next week we've got a Dutch election which could have some influence on the euro. We have the Fed rate hike for March, in some areas of the market being looked at upon as an absolute certainty. We don't believe that's the case. We won't be confident until we've got through strong non-farm figures this Friday and at least inflation figures in line with where they've been during the live FOMC meeting on Tuesday and Wednesday of next week. So our bias will be intraday this week. We will be looking for price action opportunities rather than just simply limit orders. We'll be looking for the rate hike to occur and then to take advantage of that rate, of the effect in the market of the actual rate rise, rather than trying to second guess it and predict whether it will happen. Okay guys, a reminder that if you're interested in one of our free trading events, Wednesday, March the 15th, that's a week on Wednesday, we're in London. On Saturday, this coming Saturday, March the 11th, with a full day event in Stockholm in Sweden, if that's applicable to you. If you're interested in either of these, there will be a link appearing in a moment which will allow you to click through to our website and make a contact inquiry, and we'll send you all the joining instructions and everything you need to know. There's also a logo going to appear, which means you can subscribe to these daily videos. These videos come out before 9 o'clock every trading day. And also there will be another link which will allow you to go and look back at historical morning updates, so you can see exactly what we talk about on a daily basis. Okay, thanks for listening, and we'll be back with you in the morning. Take care.